the program coordinator for Economic Policy Management Program in the Department of Economics at the University of Ghana in Legon. Gentlemen, good morning. Thank you for joining us.
Good morning.
Good morning.
All right, I think I want to start with Guta. It's a good place to start after an address on the economy. The Vice President has been called upon by many groups to say something, especially since our economy started to tighten up significantly this year. As a union, do you find any explanations, any relief, any comfort, any illumination from the Vice President's address?
Yeah, thank you very much. Well, I've listened to the Vice President, especially through the letter that you played for me to hear. Yesterday I was in a funeral, but I tried to get a little bit of it. What the Vice President have done, first and foremost, is admission that or recognition that there's a problem in the economy is very encouraging, and that he trying to even dissect and the problems inherent is also very encouraging, because for him to be able to know where the problem came from and also trying to profess solution to the problem is what we are expecting. At least it will then inspire confidence in the system to know that the management of the economy know what they are doing. And so, coming also after the finance minister's statement, and the fact that the dollar seemed to the city seemed to gain some strength after the pronouncement of the finance minister, and then also being reiterated by the Vice President, only goes to inspire confidence into the system, for which I would say is welcome. Yeah.
Right. Now, obviously, he that admission that you are sort of congratulating him for was that the real economy is felt in our pockets. So when you take the detail of his presentation and all the facts and figures, does it align with what traders are feeling in their pockets?
Definitely not, because we are not in the normal times, as we are all we all do recognize. And so, if you look at the impact of the COVID, if you look at the exchange rate, and then the reversal of the benchmark, that duties have gone up and all that, definitely a trader like myself would say that we are not in the best of times, because we face difficulty in trading. The cost of doing business have gone up. And so that's why I think we should dwell in finding solutions. He tried to make a comparison with here and there, even though they recognize that there's a problem. But I think they are also challenged the fact that they do not see their opponents accepting that there's a problem or a challenge. That's why he's also trying to bring the comparison to play. But what we all have to know is that there's a problem that is confronting us, and how do we come out of this problem? For me, that's the most important. So we should all recognize that we are not in good times. We've been here before. You remember those days that they said that let's bite the bullet, let's tighten our belt,
Yes.
let's swallow a bitter pill. In governing a nation, there will come a time that things will come this way. Maybe out of your prediction, this thing will come by international forces or other things. And so we should have the recognition that there's a real problem at stake. All of us should understand and admit, and that we do not play politics around it, and confront the situation and solve it. Okay. And that's what the Ghanaian people want.
So talking about a real problem at stake, accepting and confronting it, you've talked about how COVID-19 impacted you. The Vice President has also added, he says, the Russia invasion of Ukraine has created some problems for you. You are into the business of trading. Since the invasion, how has that impacted your business?
Very negatively, because the exchange rate has been the depreciation of the cedi have become perennial. Around December, January, and mid of February, it would then subside and then stabilize. But we were not fortunate this time round because the somewhere February end, the Ukraine war started, and that fueled speculation. And then because the demand for the dollar also went up, because maybe the bulk oil producers will have to add a lot more dollars to buy these produce, it went up. And so it had a great impact on trading, because our cedi depleted. Like I came out and said that our cedi, our capital depleted over 16% and all that. I think by the analysis of the president, vice president, they confirmed that we're not just talking out of our head. That is true. And so this is the problem that we are facing, and that you haven't done anything and your capital is being spirited away. That's not something that anybody, any business person will joke with. Yeah.
Okay.
I want to bring in our other guest as well and get some thoughts on this. So, Professor Turkson, the vice president does a lot of comparison, and it appears that the final message he's trying to convey is that if not for circumstances beyond their control, their management of the economy has actually been good. The circumstances beyond their control, according to him, are COVID, Ukraine, the banking crisis, and excess capacity charges. As an economist, looking at the reality, would you say that these things were actually beyond our control?
Thank you, and good morning to your listeners. Oh, precisely. I mean, over the last 2 months, we've had some engagement, and I think that we'll discuss this issues at length. I mean, there's no doubt that COVID has dealt a devastating blow to the public finances of most countries. Ghana is no exception. And I always say that if we look at our macro indicators, and 2019, in fact, when the 2020 budget was read in November 2019, I think that the budget gave us a lot of hope of our economy bouncing back after our IMF program and looking more like an economy that was going to, in the immediate to medium term, build some resilience in tackling some of the structural bottlenecks that our economy has faced since independence, and then COVID hit. Now, we've not spoken about this COVID thing for a long time, so I'm not going to belabor that point. But you see, around that same time was the issue of the banking crisis that the government had to step in. I mean, these are things that the government couldn't foretell, but I mean, I get that when they took office and the leadership of the central bank looked at the banking system holistically, they noticed few cracks in the banking system that if they don't go and deal with that, and the banking system collapse, was going to deal a much even severe blow on the economy. So they took the bull by the horns, and then we went through that financial sector program, with huge cost to government. So if the vice president mentions two of these factors, we all know that has been the case.
So
then also the fact that just as we are trying to recover from the COVID, and especially regarding our 2022 budget, I mean, you read the 2020 budget onwards, we've seen that the government is trying to look at a program that was going to help us to recover economy under the Ghana Care for Makampa program. Very laudable initiatives in the program. At the same time, very laudable initiatives at domestic resource mobilization. All of these things will normally take some time to begin to tell on the economy. So whilst we are trying to see if we could recover and begin to build our resilience to some of these shocks, then we had this e-levy thing in Parliament. I mean, I think that what the government should realize is that enhanced Parliament normally sends signals to investors about the ability of the government in power to carry out its economic projects and programs. And so when the e-levy issue came up, you remember, like the Vice President said, that was projecting to increasing domestic revenue, especially tax revenue, by 40%. And that was what was used in coming up with the projected fiscal deficit of 20.5 at the end of this year. So any sort of hindrances that the government sees in getting Parliament to approve one of the revenue handles was going to give a clear signal to investors who are buying our debt that that fiscal consolidation that government was looking at after COVID was not going to be met. And therefore, if I was an investor and my domestic holdings of that domestic Ghanaian bond was due, I will not roll over. I will take my money out. Don't forget at that time the dollar was also becoming stronger because of some of the geopolitical reasons that were taking place in Europe. So the U.S. became like a safe haven. So that alone was enough for some investors to say, look, I'm not going to roll over. I don't think the government will be able to meet this revenue target because of the hung Parliament. And so that led to the sharp depreciation of the currency. Like Dr. Bean told you already, in December, January, February, you tend to have some of these sharp depreciations because of so many factors. You have foreign friends repatriating some of their profits abroad. We have a situation where even those who trade with in Asia, Ghanaian importers, also close their books, and there is some demand on the forex. But this was compounded by the downgrade of our credit ratings. That clearly sent out a signal that Ghana was in distress. Forgive me for cutting in, Doc.
Forgive me for cutting in. But I suppose what we're trying to explore here is the concept of these things being beyond our control. We want to assess whether that's the case. So I can hear you going over a lot of the points that the Vice President made, but I want us to assess these points. So, for example, he mentions the Ukraine war and talks about how it has impacted our economy. Can we explore that? How has the Ukraine war specifically impacted our economy so far? It started somewhere in February. What has been the impact on our economy so far?
Yeah, so if you had allowed me, that was what I was moving into the next point I was going to make. Because I had to situate the whole analysis in you highlighting these four factors that you mentioned as being the reasons for the situation that we find out. That was beyond our control, and that's exactly what I was talking about. So then in February, then so around this time, the tension in Europe has started having an impact on oil prices. But you see, for Ghana, there are two things that happen when it comes to fuel prices. When the oil prices are increasing, there's an increase in fuel prices in Ghana at the pump. When the oil prices are even stable and our currency depreciates, fuel prices increase. So at the same time that the Ghana city was depreciating, the tensions in Europe regarding Ukraine, Russian war started increasing the oil prices, and that instantly transformed itself into a double-edged sword on the prices of fuel at the pump. And because of this system that we have of allowing it to be more market-driven, we saw fuel prices increase. And that is part of the reason why, as you speak, there are a lot of Ghanaians who are having to live through hard times now. Energy prices have increased, utility prices have increased, and these are the sort of things that tend to have an impact, direct impact on the economy. And these are external factors that we cannot do anything about as we speak. If our economy was resilient, if we had enough domestic resource mobilization sources, then we could have tried to see how best we can rationalize our expenditure and make some decisions how to move some expenditure items, which in itself, in terms of our government expenditure, is also very rigid.
Okay.
And so these external factors, when they come in, they make bare the sort of structural bottleneck that we have as a country, which over the years we have been trying to remove so that we can build a resilient economy. And that is exactly what was going on. And that's what has been going on.
Okay.
So I agree entirely with the Vice President that there are external factors that have caused us to this point.
Okay. So, Prof, let's look at the external factors that you talk about. First, let's start with COVID-19, because we've talked about how COVID-19 impacted our economy. I'll get to the cost element of it shortly and the discrepancies in that. But let's look at the IMF's 2020 economic outlook for Ghana. Now, this is what it says. The medium term, when it comes to debt, for instance, the medium-term debt path is now higher than in March, reflecting lower GDP growth in 2019 and a higher government deficit, largely due to the energy sector cost and debt service over the medium term. Public and publicly guaranteed debt, including Sino-Hydro-related debt obligations and debt of key energy sector SOEs, is projected at 65% of GDP at the end of 2029 and expected to peak at 68%, gradually declining. It talks about Ghana being a highly debt-distressed country. I'll read another point to you shortly before I ask you my question. And this particular point says that long-standing issues in the energy sector have spilled over to government financing needs. Now, the financial sector cleanup continues to create fiscal cost, with credit to the private sector yet to fully recover. With domestic revenue mobilization still low compared to their peers, the government's large borrowing needs are crowding out credit to the private sector and leave Ghana exposed to international investor sentiment. Now, this is in 2019, before COVID. We were being warned that our quest for borrowing was leaving Ghana exposed to investor sentiment. Would you then be surprised what you see today, having been forewarned in 2019?
You see, the point that you've read clearly from the IMF statement shows that the structural bottlenecks that force us to borrow are still with us. And I'm happy that you're making the energy sector debt. I mean, this is a country that was hard pressed for energy. And I think that in the haste to get as much as energy as possible, we signed so many contracts for energy supply. That is telling on us. And those debts have to be paid. We are not raising enough domestic revenue. And if you look at the present government, over the last 4 years, I think that the Minister of Finance has aligned in the various budgets policies that are directed at trying to increase our domestic resource mobilization. But these things take a while. It's not going to happen immediately after you announce the policy. I mean, infrastructure to be put in place, and then enough education to be done for people to know that their civil responsibility builds on them to pay their taxes. Nobody likes to pay taxes, but tell the infrastructure to go and proceed. So if you followed what you read, the IMF was indicating to us that with some of these debts that we have to pay, and the fact that structurally we are not raising enough revenue, it was going to lead us to a situation where our debt to the WHO was going to get to unsustainable level. And so the problem with our economy is the structural bottleneck that has to be corrected. And what happened just after this narration from the IMF was COVID that even came to make it worse.
Yeah, so the point is that COVID came to make it worse. It was already bad because the IMF had actually anticipated this. So how can that be out of our hands, particularly when we were already on a bad course?
Should I go on?
Yes, go on, go on.
What was then at that time, and the IMF was clearly making it known to us, was that we need to tackle the structural bottleneck of low resource mobilization. So if COVID had not hit, and we had been able to mobilize enough revenue, like the increase in domestic revenue that was announced this year by 40%, I'm sure we would have made headway in terms of tackling the domestic resource mobilization issue. So whilst we are trying now to tackle the bottleneck to build the resilience, following from the warnings that we already knew about from the IMF, COVID is happening. So you see, there are a lot of issues that are pertaining that if we do not try to remove this bottleneck, every external shock that will hit Ghana will send us reeling.
Okay.
There's no doubt about it. And it doesn't matter which government is in power. These issues are very fundamental to the Ghanaian economy.
Okay, so you generally, if you're looking at an economy of this nature, for instance, would use the outlook in your analysis. And so when you look at the outlook and you look at what really transpired, you would measure the shocks, look at the outlook, and be able to determine. So you're saying, yes, we're on a bad course. COVID may have impacted us negatively.
It did, not may have, it did.
Okay, it did, but we were on a bad course too.
We are not. I mean, so I want you to take a look at the 2020 budget. I don't want to seem to like on the defense of government, but as an economist, I confront myself with the data. What I saw at that time and read was clearly a government that was putting in place policies to improve domestic resource mobilization. I mean, the setting up of rates and all of those interventions was geared towards ensuring that we raise enough domestic resources.
Okay.
Some of these policies have already been put in place.
Okay.
But
now,
the point is that COVID hit so soon that without us having fully set up the infrastructure and put in place the policies to increase domestic resource mobilization, we were hit by COVID. And most of the tax handles that were contained in the budget were rolled back. Exemptions were given, tax exemptions were given to frontline workers. All of these things led to a sharp decline in our revenue.
okay.
And led to those huge fiscal deficits that will pile up our debt. So you see, we need to look at this extra external factor that hit our economy and not let's pretend that the economy was in so much of a bad shape. Look, go and read the 2019 Article 5 report from the Vice President of the IMF and look at the comment and the embedded that it passed on the economy, that they were leaving Ghana stronger, they were leaving Ghana on a note that if what we have started continued, the future is going to be good for Ghana. I don't have the document.
I have the document. In that document, too, there were warnings. Yes, they talk about the favorable climate, and they talk about the warnings. And it's
exactly.
some of them that I've
read.
read.
And the warnings have to do with the
you were
structural
warned
documents that we face. And I'm saying that no matter which government was in power, if we don't tackle these structural bottlenecks on domestic resource mobilization, no matter which government is in power, any external shock that will hit us, especially that will have an impact on public finances, will lead us to move to a level that we are.
Okay. Let's get to the Ukraine situation. It's been a month. We've talked about how that has impacted us. Some have made a reference to our fundamentals. They've made reference to inflation, and have talked about how even that one, the situation in Ukraine has impacted us. Now, the war started on the 24th of February. 2 weeks to it, you probably had a few, people anticipating that happening. Let's look at consumer price inflation, for instance. It's important we use that to actually look at where we were going to. So if you look at it, for instance, Professor Texing, in September 2021, it was 10.6, rose to 11.0 in October 2021, then rose to 12.2 in November 2021, then 12.6 in December 2021, to 13.19 in January 2022, and 15.7 in February 2022, according to the Bank of Ghana's Summary of Economic and Financial Data published on the 18th of March. We had seen a certain growth over the period. So, how then do we turn around and say happenings of the last month or two is what is taking us to some of the levels we're talking about?
Thank you. I mean, look at the inflation issue. I mean, look at the global economy. Almost every economy in this world is having to face relatively high levels of inflation. Some coming from the global supply chain bottlenecks that have arisen after the COVID, others coming from the world oil prices. And what is important to note is that Ghana had, before COVID, been under a single digit. In fact, I think that somewhere in 2019, we were discussing that we should set our target down because we are overachieving our target of the 8 plus minus 2. And so, age inflation has been increasing over the year, as you alluded to. It's expected. It's expected within a global economy where almost all countries are facing higher rates of inflation. Don't forget that with a dip in output, it was going to take time for economies to recover. Increase in some world market products were also leading to increase in food prices and all of that all over the world. Now, Ghana being part of the multilateral global trading system was going to also have this imported inflation coming. Don't forget that we are import dependent. We import most of our inputs. We import most of our consumer goods. And therefore, the increase in prices that were being faced all over the world was going to transform into our economy. The Central Bank, under a Monetary Policy Committee, because we were more concerned about having to support initiatives to grow the economy, maintain their monetary policy rate over a period of time. But with the inflation expectations and the high rate of inflation that we are seeing, the Central Bank moved in to increase its policy rate to see how best to bring down the inflation. Because if you look at it, once inflation was high, returns were getting to a negative, and there was the need to make sure that returns were not negative. So as for the inflationary situation, I would not say that it's a good thing. It's not too bad anyway, or even though it is way above what we normally target. But with the right policies in place and the competence of the Monetary Policy Committee, I think that these rates will later on tone down. But what is important is to find out if our road sector growth last year and this year will be enough for our economy to bounce back and have a telling impact on some of these indicators that we are talking about. So, yes, inflation has gone up. Inflation didn't go up before COVID. Inflation started going up over the last 2 years and become much more higher because of other issues that I've mentioned. And so I don't think that Ghana is an exception. I mean, Cote d'Ivoire, Nigeria, most economies, the U.S., for instance, have seen inflation hit the all-time high in 40 years. And so, I mean, we should also recognize the fact that the global economy is going through challenges. And as much as we seem to be having things tight here, almost every part of the world, people are also going through hard times. Yeah, so what is important for us is to be clearly focused on what we need to do to build a resilient economy, which is very critical. How to recover, how to build a resilient economy, and how to make sure that we build our public finances so that we can reduce our appetite for borrowing. But if that is the only way out, what else can the government do? I mean, up to speak, there are a lot of Ghanaians who don't pay income taxes. I mean, yes, we need to go and pursue them to collect those taxes. Property rates. I mean, these things, we've spoken about them more than a decade. I've even lost appetite for speaking about them.
Yeah.
But these are the issues that confront us, and unless we do something about them, I'm sorry, these things will come up every now and then. I remember when the IMF was leaving in 2019, questions were asked, when were they going to return? We all need to return sometime if we don't do the structural foundation, that transformation that would lead our economy to rely less on the IMF.
And that's still a possibility, I suppose. I want to bring in Mr. Joseph Obing. One of the things the Vice President said was that the effect of the delayed passage of the Elevy bill is that investors lost confidence in us as a nation. Does that make you and other members of GUTA pleased that we have now passed the E-levy?
We have been lamenting that the people who pay taxes are just a few. I hope I've talked with you on so many occasions. The input that we've been making to government all this time is to make sure that they expand their tax net. As a matter of fact, we petitioned government to tax online businesses because that has become the new norm. That is taking away the traditional businesses, and they are not paying legitimate tax. And those of us who have fixed addresses are being targeted for tax and all that. So the e-commerce tax that came, we had a serious input in that. So in that regard, any effort by government to expand the tax net, we are all for it. But normally what I say is that even though you are making the attempt to expand the tax net, affordability of the taxes is very important so that to ensure compliance. So as to whether the rate of the tax is affordable is for all of us to contend with. And that's what I'm talking about. And then we need education also. And then also we'll be thinking about the aspect of double taxation. We need to talk with Ghana Revenue Authority in that regard for us to know whether we'll be able to file deductions at the end of the year when we are filing our taxes, those aspects of double taxation that we would have met with the E-levy. And so apart from that, I think anything that ensure that we are expanding the tax net, as the other speaker was saying, that we have to get more domestic revenue to shore up our our revenue is very important. But having said all these things, if we pass on the E-levy, we pass on the e-commerce, and then the no duty, no exit, and all that, we have to get the assurance of value for money, for expenditure. If you do all these things and we overprice contracts and all that, then it becomes discouraging for tax payment. So what I'm waiting to hear, especially when government itself have made some sacrifices by cutting down its expenditure and all that, what measures are we putting in place so that if you recall, a contract that is given by MTN, the same project, MTN is charging it's costing MTN 3 billion or 300,000 Ghana cedis. It will cost the one that government have given maybe 1 million. This is what I'm talking about. If we are not able to do this, and we behave like that the same way that we are doing, and then also most of the things that we are also doing as a government, the expenditure pattern for our political, maybe flagship programs and all that, we have to put some of these things on the table and cut off some of those that are not very, very important. So that by saving through the expenditure that we are doing, we are also enhancing on our lot in the economy. Otherwise, it is we are taking See, much as we support government quest to expand the tax net, to have more revenue and all that. Let's dwell on the expenditure patterns, the way we expend, the way we overprice contracts and all that, so that at least that can also bring some savings for us, and it will give a lot of respite for us all as trading community.
All right. Thank you for that. I want to thank you both for making the time to speak with us, our guests this morning, on a conversation that has only just begun. Joseph Obing is the national president of GUTA, the Ghana Union of Traders Association, and Professor Ebo Turkson is an associate professor of economics and the program coordinator for economic policy management program at the Department of Economics, University of Ghana. Thank you both. God bless you. And we'll be right back after these.
What would you do if you have the choice to do anything in life? Build your dream house, take very good care of your family, and plan for a comfortable retirement. Plan a befitting funeral for your loved ones when they depart. How would you live if you knew there was a friend waiting to support you on all of your life's choices?
You have such a friend in Glyco Life Insurance. Glyco Life has all the plans to meet your life's needs: your child's education, your life savings, your mortgage, funerals, redundancy, and your retirement, and takes the burden off your shoulders. So go ahead and live life to the fullest today with Glyco Life Insurance plans. And remember that all our policies are hedged against inflation. Talk to Glyco Life on 0302 218 500 or 246 142. Also visit our website at www.glycolife.com or any of our branches nationwide for more information.
Glycolife, we cushion you for life.
Glyco, we cushion you for life.
The passion of Easter is always memorable when you relive it on your Samsung television. Families and friends.
At our light off. Oh, no, relax. Oh, no. Yesterday I had this problem on my TV. Samsung Easter promotion. Easter now fall. Starting from as low as 1,499, you can get a quality 32 inches Samsung LED FHD television. Massa, your fridge is not working? Look, this Easter, do something. With 2,799 Ghana cedi, your family will enjoy the coolness from a Samsung fridge. Quality forever. Hey, so 1,399. You can get yourself a Samsung quality washing machine, sound bar, sound tower, split AC. What have you? This Easter, you should be smiling. Samsung Easter promo. You are covered. Easter now fall.
The feeling of being the champion of the famous childhood game, Pilolo, is like knowing a secret that no one knows and using it to your advantage. That is the feeling of being on Ghana's favorite network and getting your money's worth. With Airtel Tigo, you can get exciting tailor-made products and services that work for you. Dial *111#. Select option 1 for big-time data to enjoy data that doesn't expire, and option 4 for Sika Koko to enjoy huge data at little cost.
Airtel Tigo. Life is simple.